Good evening. Here is the latest update on developments in the precious metals market. Gold and silver prices moved higher as renewed concerns over inflation influenced investor sentiment and triggered a notable reaction across financial markets. The rally in precious metals followed growing apprehension about rising price pressures, which prompted market participants to shift their focus toward traditional safe haven assets. During the latest trading sessions, both gold and silver recorded measurable gains. The upward movement reflected increased demand from investors seeking stability amid uncertainty surrounding inflation trends. Market activity indicated that inflation fears were a central factor behind the buying momentum observed in the metals sector. Financial markets responded swiftly to the developments. As inflation concerns resurfaced, investors adjusted their positions, contributing to volatility across asset classes. Precious metals, often regarded as a hedge against inflation, experienced heightened trading volumes as participants repositioned portfolios in response to the evolving economic outlook. Analysts monitoring market movements noted that the rise in gold and silver prices coincided with broader discussions surrounding inflation data and its potential implications. The renewed focus on inflation appeared to drive capital flows into metals, reinforcing their role during periods of economic uncertainty. The rally also reflected shifting expectations within the investment community. As inflation fears intensified, demand for assets perceived as stores of value strengthened. This trend was evident in the steady climb of gold prices alongside gains in silver, underscoring the direct market response to inflation-related developments. Overall, the movement in precious metals highlighted the sensitivity of financial markets to inflation signals. The surge in gold and silver prices marked a clear reaction to economic concerns, with investors turning toward established hedges as uncertainty persisted. In the next segment, we take a closer look at the detailed market movements and the specific factors that contributed to the acceleration of this rally in gold and silver. In this segment, we take a closer look at the market developments that shaped the initial phase of the rally in gold and silver, as inflation concerns intensified and prompted decisive action across trading floors. The upward movement in precious metals began as investors reacted to mounting worries over inflationary pressures. As these concerns gained traction, buying activity in gold increased steadily, driving prices higher through successive trading sessions. Silver followed a similar trajectory, benefiting from the broader momentum that carried the metal's complex upward. The shift in sentiment was visible in both spot and futures markets, where participation levels reflected heightened investor engagement. Market participants appeared to respond directly to discussions surrounding inflation trends and their potential impact on purchasing power. With price pressures remaining a central topic in financial discourse, investors gravitated toward assets traditionally viewed as protective during inflationary periods. Gold, long recognized for its role as a store of value, attracted significant inflows, while silver also drew increased attention as part of the broader precious metals category. Trading data indicated that the rally was supported by consistent demand rather than isolated transactions. The price action showed a pattern of sustained upward movement, suggesting that inflation-related concerns were influencing positioning decisions among institutional and retail investors alike. The metals market saw increased activity as traders adjusted portfolios in response to evolving economic signals. Financial markets beyond precious metals also registered reactions during this period. As inflation fears resurfaced, volatility was observed across multiple asset classes. Investors recalibrated risk exposure, contributing to fluctuations in equities and currency markets. In this environment, gold and silver stood out as beneficiaries of capital flows seeking relative stability. The performance of gold was particularly notable as it reflected a clear alignment with inflation-driven demand. Each successive gain reinforced the perception that investors were using the metal as a hedge against rising consumer prices. Silver's advance complemented this trend, with its price movement mirroring broader investor behavior within the safe haven segment. The rally unfolded amid continued monitoring of economic indicators linked to inflation. Market attention remained focused on data releases and policy discussions that could influence the trajectory of price growth. As these developments unfolded, the metals market reacted promptly, incorporating new information into pricing dynamics. Throughout this initial phase, trading volumes suggested active participation from a wide range of market actors. The consistency of buying interest underscored the role of inflation fears as a catalyst. Rather than a brief spike, the movement demonstrated a sustained shift in sentiment, with gold and silver maintaining upward momentum as discussions around inflation persisted. At the same time, broader financial commentary emphasized the interconnected nature of the response. Inflation concerns did not operate in isolation. They influenced expectations across markets, shaping decisions that extended beyond commodities. Yet, within this broader landscape, precious metals emerged as a focal point for investors seeking reassurance in the face of economic uncertainty. As this first phase of the rally progressed, the link between inflation fears and metals performance became increasingly evident. The reaction in gold and silver prices illustrated how swiftly markets can adjust when macroeconomic themes regain prominence. In the next part of our coverage, we will continue examining the remaining developments and market reactions that define the latter stage of this significant movement in precious metals. As the rally continued into its later phase, the strength in gold and silver prices remained closely tied to persistent inflation concerns and the broader reaction unfolding across global financial markets. The second half of this development was marked by sustained investor focus on inflation-related signals, reinforcing the upward trajectory already established in the earlier sessions. During this period, price gains in both metals extended as market participants maintained their defensive positioning. Gold continued to attract consistent buying interest, with trading patterns reflecting ongoing demand rather than short-term speculation. Silver mirrored this movement, advancing alongside gold and reinforcing the broader rally within the precious metals sector. The parallel rise of both metals underscored the unified market response to inflation fears. Market activity suggested that participants were closely monitoring economic indicators and commentary related to price pressures. Each development tied to inflation appeared to influence sentiment, contributing to steady trading flows into gold and silver. Investors adjusted allocations in response to perceived risks associated with rising consumer prices, and precious metals remained central to those portfolio adjustments. At the same time, volatility in other segments of the financial markets persisted. As investors reassessed exposure to various asset classes, shifts in equities and currency markets were observed. Within this environment, gold and silver maintained their upward bias, reflecting their established status as assets often sought during periods of economic uncertainty. The continuation of the rally indicated that inflation concerns were not viewed as temporary, but rather as an ongoing factor shaping investment decisions. Trading volumes during the latter part of the rally further demonstrated broad participation. The movement was not confined to isolated market segments. Instead, it reflected a wider shift in strategy among diverse investor groups. The steady climb in prices suggested a collective reassessment of risk and value preservation in light of inflationary developments. Gold's performance remained particularly prominent as it consistently registered gains that aligned with renewed attention to inflation risks. Silver's rise complemented this performance, contributing to the overall strength seen in the precious metals complex. The coordinated advance of both metals highlighted the depth of the market's reaction. Throughout this phase, commentary within financial circles continued to reference inflation as the primary catalyst. Market behavior indicated that traders were incorporating new data and statements into pricing decisions almost immediately. This responsiveness reinforced the link between macroeconomic signals and movements in gold and silver. By the conclusion of this detailed sequence, the rally had firmly established itself as a direct response to inflation fears. The progression from initial gains to sustained upward movement demonstrated how economic concerns can influence asset allocation across markets. In the final segment, we will provide a comprehensive summary of the developments and the overall market reaction, based strictly on the facts presented in this report. In summary, gold and silver prices moved higher as renewed inflation concerns influenced investor behavior and triggered a clear reaction across financial markets. The rally in precious metals developed as market participants responded to growing worries about rising price pressures. This shift in sentiment led to increased demand for assets traditionally regarded as hedges against inflation. Throughout the trading sessions covered in this report, both gold and silver recorded measurable gains. The advance reflected consistent buying interest rather than isolated movements. Investors appeared to adjust their portfolios in response to inflation-related developments, directing capital toward precious metals amid broader market volatility. Trading volumes indicated active participation, reinforcing the view that inflation fears were a central driver behind the upward momentum. Financial markets more broadly also reacted as investors recalibrated risk exposure. While fluctuations were observed across asset classes, gold and silver stood out for their sustained climb. Their performance underscored their established role during periods of economic uncertainty and heightened attention to price stability. The rally unfolded alongside continued monitoring of economic indicators and discussions surrounding inflation trends. Market pricing incorporated these developments in real time, reflecting the close link between macroeconomic signals and asset performance. Gold maintained steady gains, and silver advanced in parallel, highlighting a coordinated movement within the precious metals sector. Overall, the developments outlined in this report demonstrate a direct and measured market response to inflation fears. The upward movement in gold and silver prices represented a clear reaction to economic concerns, with investors seeking stability through traditional safe haven assets. That concludes our coverage of this market update. Thank you for watching.